What's going on, guys? So I just got an email from Cathie Wood. Well, not me personally, but as an investor of ARK funds. And basically she's talking about her big ideas for 2021. So as I'm going to be reading this, I was just thinking maybe I should just make a video. And in this video, I'm going to be summarizing some of her best points about electric vehicles. I have this down in my notes already because I took a glance at this. Electric vehicles, automation, and 3D printing like NMDM. So we're gonna cover a lot of stocks that I cover on this channel. If you want a condensed version, I have a free downloadable link for you on a PDF that I created just for you guys on the top stocks and ideas that Cathie Wood has that I'm personally looking out for, because this is a very long list. As you can see here, obviously Cathie Wood is all about disruptive innovation. And if we scroll down, I'm gonna scroll down past the risks. So obviously you guys kind of know the risks. With disruptive innovation, things are changing so fast. So there's like regulatory hurdles, political landscape, there's uncertainty and unknowns, which is pretty much the case with a lot of different stocks, but with innovative companies, that is even more so the case, and rapid change. But anyways, these are the different areas that Cathie Wood likes. This is so-called thematic investing, like the sectors that Cathie Wood really looks at. And we're already very familiar with automation. So I looked into automation here on page 58. I'm gonna go into that in a little bit. Electric vehicles right here on page 51, we'll go over that. And then 3D printing, because NMDM is a very good killer stock that's making a ton of money. It's like an easy money play. And I called it a $15 stock. I called it a $10 stock when it was like $3. When it started going up to 8 or 9, I said it was 15. Now NMDM has done all of that and it's still rocketing higher. It's a big money maker for us here. So we're gonna talk about NMDM a little bit here, over there. Electric vehicles, obviously we have Tesla and NIO. Tesla and NIO, they're like guacamole on your Chipotle burrito, man. It's like a little bit extra, but it makes you feel real good. And those stocks have made us a ton of money. I might not go over all of this because this will be a very, very long video otherwise. Let's kind of get into it. And again, if you want a shortcut, you don't want to read all of this and you just want my summary, after I make this video, I'm pretty much going to be spending a few hours really digging in and making my own PDF for you guys. So that's going to be free, downloadable for you in the description below. So let's get into it, okay? So the first thing is deep learning. So guys, I've actually learned about deep learning because I was a digital consultant for IBM, and I think deep learning and artificial intelligence, these are keywords that are going to be very popular into our future. And specifically what deep learning is it's an algorithm, it's a machine that really learns, kind of like a human learns, and then the more data that you feed that machine, the more it gets suited at answering different problems. So for example, the Google AI or the Google Deep Learning, it actually takes in images of people and then it actually sees, is this the same person or is this a different person? And it's really good at doing that. For example, if you give it a random image and say, is this a man or woman? Google will be able to tell you this is a man or woman, or just crazy stuff like that. They're able to do like facial recognition. Deep learning also goes into autonomous driving. So vehicles like Tesla, you know, we're gonna be able to have vehicles drive themselves, and deep learning is a part of that process. So let's take a look. Deep learning is software 2.0. It's code written by humans. And right here, you know, I haven't looked at all of this, but basically it's an exponential chart here, guys, an exponential chart of technological advancement. So here, you know, they're saying that deep neural nets or deep neural networks won the ImageNet challenge, marking the beginning of the deep learning era basically in about 2012. And now, you know, we just started in 2012 with an era of deep learning, and now it's only been what, 8 or 9 years since then. And we're in a point where during the next decade, we believe that the most important software will be created by deep learning. You know, enabling self-driving cars, I've said that, but also accelerating things like human life, health, drugs, discovery. And the craziest thing is nobody's immune to losing their job. So, you know, we're automating simple tasks, you know, like maybe in factories, we have companies now doing 3D printing and printing all kinds of machinery that's going to be doing the work instead of factory workers. But believe it or not, even coders and computer scientists, some of them might be out of work because, you know, I think this is what it's saying here is that deep learning could really write software of its own, which kind of gets really scary because I think Facebook did a test where they had like deep learning or AI and they started communicating between each other. There was kind of a few scary things going on there. I don't remember exactly. I think that was a year or two ago. But this is kind of scary because there's something called singularity where computers may become smarter than humans. However, it doesn't really matter because we can't control that. But what is fact? It is not fiction. Is deep learning will progress, computers will get more advanced, and there's gonna be so much money to make in these fields. There's gonna be all these stocks that are gonna blow past the roof. Again, I'm gonna be putting that in my document because I'm just reading through this. I'm gonna do more research after this video, but I know deep learning stocks are right on top of my head. Tesla, Nvidia is a really good one. And these stocks are gonna blow past the roof and they're gonna make a ton of money because they're innovative and they're changing the world. So let's keep going here. Self-driving cars are really dependent on deep learning and AI because technology is really shifting these cars into vehicles that drive themselves. So in the future, you might get into an Uber and it's not gonna be you. It's not gonna be you and another person in the car. It's gonna be the car and you alone. And the car is gonna be driving you where you need to go. Kind of a scary thought to think about. However, it's going to be way cheaper. I mean, the cost per mile is going to be way less for Uber because they don't have to pay a driver. And for you, you get to save a ton of money because you don't have to pay the overhead of someone driving you. So there's also all these other consumer apps, and we've already seen this with social media. I mean, with deep learning social media, oh my goodness, I should have thought of this myself, but in ARK, the Patreon portfolio that I have, that I follow Cathie Wood, and I try to pick my favorite stocks. Snapchat's been growing a lot in terms of how much they're able to charge with their ads. You know, they're learning, they're using an algorithm. Same with TikTok right here, guys. We see on my screen right here. TikTok and Snapchat, these are social media networks. They're like Facebook. They make a lot of their money through advertising. Stocks like this are gonna really benefit from the deep learning trend. So yeah, that's deep learning. Let's keep going here. I'm gonna just scroll down. So yes, actually, by the way, I mentioned NVIDIA, and deep learning is creating a boom in AI chips, guys. So AI chips are basically the machinery or the hardware that is required to run deep learning because deep learning is so, you know, intensive on technology and software, and just the technological components need to be there, and the AI chips enable deep learning to be possible. All right, so deep learning is going to create a huge demand for AI chips. We see that right here. So companies like AMD, NVIDIA, Xilinx. So XLNX is a stock that is owned by Cathie Wood. That is a stock that I haven't talked about on the channel, but it is also a popular stock that I may incorporate at one point or another, or just talk about on Patreon. But that is a stock that I also think has a really bright future because it is in the AI chip space, so it's going to be benefiting from this trend overall. Reinforced learning, that's basically what I was talking about, where computers continue to learn. Let's keep scrolling here, guys. What we're going to do is we're going to go actually scroll back up. I'm going to look at the themes that we want to look at together. So electric vehicles is what I said I'll be looking at. If we have some time, I might do some Bitcoin as well. All right, I had to get some water. Back to the table of contents. So we're gonna go over to electric vehicles, which is page 51. And let's take a look over there because electric vehicles are an area where the YouTube family has been feasting. I mean, this stock has absolutely made so many millionaires or so many 100,000aires along its path. Since we have earnings coming up, this is a really interesting area to look at just right now, but also for the rest of 2021. I couldn't agree with Cathie Wood anymore over here. So electric vehicles are approaching sticker price parity with gas-powered cars, and that is going to be a game changer. I mean, with Tesla Model 3, I already think it's pretty much parity with the Toyota Corolla or Toyota Camry out there. But you know, when parity is actually reached, if it hasn't already, or electric vehicles become cheaper and make more financial sense, that's just gonna be the nail in the coffin for the internal combustion engine vehicles. So this is where risk does come in because a lot of the traditional automakers right here, which is what Cathie is saying, could actually have successful vehicles themselves that are electric powered and have autonomous driving. However, because they are so far away, Ford and other companies are working on this, but they're kind of far away from the technology of a Tesla or a NIO, so it will still take some time for them to catch up. And if you're staying up on top of news, then even if they do start catching up, you'll be able to rotate your money out of the Teslas and NIOs out of the world, but I just don't see that happening at all. I'm a long-term Tesla and NIO investor. I don't think those companies are gonna catch up. I think they're multiple years away, 3, 4, 5 years away. And if they start catching up, hey, we'll kind of reevaluate it at that point. But for now, it's easy money to be betting on the EV space. And this is something that I love that Cathie is mentioning. So if we scroll down here, electric vehicle sales have taken share in good times and in tough times, which I think is a very good point. So pretty much going back to my point about the financials, it almost doesn't matter. People are just on board with electric. They know that this is the future. So both from an investing standpoint and a consumer standpoint, they want to have electric vehicles because it saves money and they don't want to pay for gas. And some of the gas prices around the country, they're unstable. We don't know if they're going to go up or down, but with electric prices, they're a lot more stable and they are much cheaper than going to the gas pump. Not to mention, who wants to pump their gas nowadays? I hate pumping my gas. Whenever I go pump gas, I always pay a little bit extra for someone to do it for me. I wish I lived in New Jersey in that regard. It just makes so much sense. You come home, you have a Tesla Powerwall, you have the Tesla sunroof, you have the Tesla vehicle, you plug your baby in, you take a look at how beautiful it is. Maybe you watch a movie inside. It doesn't matter, it's way easier. I mean, just plugging your car in, it just feels amazing over there. The vehicle sales growth has been 33% in 2020. That is quite some numbers right there. And gas-powered vehicles, as you guys can see here, has declined by 15%. So, man, the trend is clear, guys. The trend is your friend. I'm gonna skip over this because we already know this. I talk about this on the channel all the time. The decline in the battery costs, it's on an exponential curve. Basically, I don't even need to read this, but I know Wright's Law is basically saying that the battery costs are falling year over year because it's just becoming more efficient to make them. They can store more energy and they're just cheaper to produce on a massive scale. So that's benefiting car companies like Tesla. And it's probably benefiting NIO too, although they do outsource their battery needs right now. I do know that. So however, the supplier is going to have lower costs, so that's going to translate into the supplier being able to reduce their price and still make a profit margin. So it is going to benefit NIO a good amount as well. So we're going to go down now. Electric vehicles are approaching sticker price parity. We talked about that. So, oh, look at that, the Toyota Camry. So how did I know? Because, well, the Toyota Camry is one of the most popular cars in the world. I technically still drive a Corolla right now, even though I'm probably going to move and be a nomad and not have a car for a bit. / maybe upgrade to a Tesla in the near future when I do kind of settle down a bit more. But I just know that Toyotas are the standard, guys. I mean, Toyota, Honda, these are the common cars of America. And Toyota Camry is a very good kind of car to compare with the Tesla Model 3. So let's take a look over here. So 350-mile range EVs, back in 2019, they were about $50,000, where Toyota Camry was $24,000, so it didn't make so much financial sense. You kind of had to be a bit more wealthy to really afford an EV in 2019. In 2020, it's gone down. I guess she doesn't have the 2020 price, but we all know that the Model 3 is less than $50,000. I think the base Model 3 is about $35,000. I'll put it up on screen right now. So in 2021, this article by Kathy Wood and her team is estimating that the average price is going to be $39,000 and the Camry is going to go up. So you guys see that the EV is coming down and the Camry and the internal combustion vehicles of the world are going up because they want to make more profit. So they're going up, and as it rises, guys, and EV vehicles fall and they become cheaper, it looks like 2023 is the parity point that Kathy Wood is thinking that EVs and traditional vehicles are going to be the same price. So expect 2023 to be a pounding good year, just absolute killer in terms of making money. And I basically expect that EVs, I mean, I already think they're mainstream, but I think by 2023, at this price point, when things are truly even, everyone gets on board, the mass market gets on board, everywhere in the world, middle of America, East Coast, West Coast, South, where Texas is, everyone gets on board. And they kind of already are, but when they all get on board, it's game over, guys, game over. You're gonna make so much money if you're already holding EVs. And just from the EV space, you're gonna make a ton of money. So in 2025, 2 years after 2023, you're gonna have to be pretty stupid to go with internal combustion engine vehicles because they just cost more. So you're paying more for some BS. You're paying something for a vehicle that is not as good, that has those gas costs, when an EV is cheaper. So it's a no-brainer, guys. It's a no-brainer. Kathy Wood and her team, they know what they're doing over here. So that's something that I really do look at. And I think this piece of research is really interesting. So you can almost guarantee that I'm gonna have, this image or the stocks that I'm looking at that will be benefiting from this trend in that free research article that I have for you guys after I finish this. I'm definitely gonna be putting that in because it just makes a ton of sense. I mean, why would you wanna have a Camry when you can have the Tesla Model 3? I don't know. So here, in addition to cost, EVs are competing on range and performance. So yes, I do know that that is the case. So It looks like electric vehicle efficiency versus performance. I'm not so familiar here. I have not really looked at acceleration because, I mean, I know it's really cool if you're a car fanatic to have really fast car acceleration, but a lot of places, you know, they just want a really reliable vehicle that looks really nice and sleek. It's gonna be fun to drive, but you don't need to go 0 to 60 all the time, super fast. So I know the Porsche Taycan is #1 in this space. Looks like the acceleration is very fast. It is the fastest. And I guess Porsche lovers are gonna go with Porsche over even the Model S or Model 3 over here. But you have a whole lot of variety here. You can have the Nissan Leaf if you don't mind going 0 to 60 miles per hour in 10 seconds, or you can go for the Tesla Model 3, which I think is just the best of both worlds. It has the highest range. So you see guys, this is the trend line right here, and Tesla is a clear winner. So Tesla is clearly winning on the range plus the acceleration because it's just an outlier. And actually I'm surprised to see NIO here. So NIO, the EC6 is right on the trend line. It's a little bit over 4 seconds in terms of acceleration. And the range is pretty decent, but the range on the Tesla is a little bit more decent. So now let's scroll down. At today's battery prices, cell-to-vehicle technology enables longer range EVs at lower prices. So we actually saw that with the last Tesla Investor Day. So they're packing in more and more battery cells into smaller and smaller capacities, which is just gonna benefit technology longer term. So these vehicles are gonna have crazy ranges without weighing a whole lot or costing a whole lot. So the technology, you know, as we saw with Cathie Wood, by 2023, the price disparity will be there. Then it's just gonna continue improving from that point on. All right, guys, so the next thing I wanna talk about is automation because I know ARK is all about automation and there is a lot of stocks that are gonna be benefiting. So let's kind of scroll down here and let's take a look at the robot economy. So I already see US manufacturing robot density. That's going to be increasing because these companies want to save money. They want to scale their operations, and having workers is pretty tough because workers ask for raises, workers ask for time off, workers get sick. Robots don't do any of that. They just work really hard and there's no increased costs aside from maintaining the robot and making sure that everything is going smoothly. So autonomy and automation is going to be a huge industry into the future. And the trend is very clear here and it's very big. So also I know that Cathie Wood really does look at robots and specifically industrial robots because they make the most sense for the business. These companies that are in the industrial space that have a huge amount of volume, they can save a lot of costs by going with robot technologies. All right, so I just wanted to pull up ARK because this is pretty much the robotics and automation ETF, but it's also the autonomous technology ETF. It has a whole bunch of things going for it. Robotics and automation are a key component. So when I scroll down to the holdings over here, we have stocks like Materialize. I don't really follow that stock, but we have stocks like JD.com, which is basically an e-commerce giant. We have Deere. Deere is something that Cathie Wood really likes. And Deere, they make all those big machinery items. You know, I guess robotics can really help them because those machines are very costly. And I can only imagine the cost of what it would be if someone were to kind of build those machines with their hands. So I can pretty much assume that Deere as a company is doing kind of what Boeing and Airbus is doing, which is automating as much as possible and having the engineers handle the rest. Building these big machinery items are very expensive because the labor is very specialized labor. Now going down, we have Nano Dimensions, and oh my goodness, it's 3.62% of Cathie's ARK portfolio, and she's still adding shares of this company. So my goodness, I think Nano Dimensions is going to be a big winner. I'm gonna go back to automation. I'm actually back at the table of contents because I just wanted to highlight a few of the stocks that you could be looking at if you're interested in having a portfolio that benefits from the robotics trend. All right, guys, so I'm gonna be summarizing a lot of key pieces of this article for you because I don't wanna make this video too long. However, I'm super excited about a lot of these trends, and a lot of these stocks are already mainstream, but not all of them are mainstream. So I'm gonna be adding some of the stocks that I think can become mainstream and really benefit from these type of trends into the future and kind of make us a lot of money here, because that's kind of what we're going out for. We're doing our research. We're trying to pick these investment winners so we can grow our wealth, but also invest in innovation. And these innovative companies are gonna be changing the world and changing our pockets at the same time. So thanks guys for watching. Make sure to go out there and make some money, and I'll see you guys in the next video.